Hi guys, and welcome to Commercial Q&A. I'm Mike Baker. I'd like to take the opportunity to wish you all a very happy, healthy and prosperous 2018. Today is the 4th of January, so it's the first day of the final Ashes test, and in support of the Jane McGrath Foundation, the fantastic work they do, I'm wearing my pink shirt. So today I'd just like to touch base on the year ahead, and I have been asked about the outlook for commercial property. I'll just give you my opinion in two parts. One is from the tenant's perspective and one is from the landlord's perspective. Firstly, from the tenant's perspective, I think this year we just need to continue to focus on things that you as small business owners can focus on, and that is obviously rent is part of your fixed costs. Just make sure that those rent payments that you make you're not really seeing those creep up over, say, 20% of sales. Typically, and in years gone by, rent as a proportion of sales used to be below 10%. Well, now with so many things in Australia going up, for example, the cost of running a business and the cost of doing business has increased over the last decade. That has creeped up into the 10 to 20% mark, and even some businesses paying rents that are over 20% of sales. So I just caution, I guess I would advise business owners just to keep an eye on that and to try to just monitor that as well as going into this year. Again, it's a conversation that you can have with a landlord. I would be, if sales have come back and your rents have gone up again this year, I would be raising that with the landlord. And I think part of the agent's job is to advise the landlords that, look, you know, businesses, a business may have suffered some sales decline or whatever. That needs to be advised to the landlord. So just monitoring your rent as a percentage of sales is important. Then you get to focus on the big area for you as a small business owner is your top line. Okay, where is your revenue coming from? Really trying to focus on potentially new areas of bringing revenue into your business. And I know here in the Junction, a couple of businesses are doing a really great job embracing social media as a platform to generate sales whilst they have their bricks and mortar retail shop here in the Junction. Now, from a landlord's perspective, really it comes down to the outlook for global interest rates. That's my view. The cost of money has been distorted over the last 10 years given the massive intervention by central banks. Now, what happens this year, I don't know, but what I would say is that the US Federal Reserve is now taking on a program of quantitative tightening as opposed to easing, which means that they'll be now trying to sell the bonds that they had bought into the bond market. Now, that will cause some issues in the bond market. They'll clearly try to do that slowly, so you don't expect a huge readjustment, but I would just caution property owners that is the big unknown, in my view, is how quickly do interest rates readjust upwards. I can't see, barring some extraordinary external shock, interest rates going much lower. If anything, you would think the risks are to the upside in terms of interest rates, but again, this is a guess. All I can see is that the Federal Reserve in the US will be doing a program of quantitative tightening this year, and they've already started it in the last 12 months anyway, so they will carry on with that. So the other area obviously is China. How do they grow this year? We expect more money to come into the Australian property market potentially, or does that change? So keeping an eye out for those sorts of bigger macro issues, I think, are important. Clearly, it is still a seller's market in commercial property, so you can still take advantage of pretty strong commercial property prices with compressed yields. Now, having said that, there are still some great yields on offer in regional areas. I know we've done a couple of deals in Gympie on yields of 8% and higher on long-term leases. So I think you just need to be aware of, obviously, your location. In Noosa, there are some properties that have sold, commercial properties that have sold on yields of 5% or less. So they clearly show that it has been a seller's market. People are chasing yield still. However, as interest rates readjust, I think that will slowly change, because in my view, chasing yield for yield's sake is not a great strategy. We've seen that, for example, in the share market with Telstra investors chasing yield, share price pulls back, dividends get cut, and your whole premise has really been has been tarnished, if you like. In the property market, again, think about the underlying asset and think about it being vacant, and for potential property buyers, think about what would you think it would be worth if the property all of a sudden became vacant. They're important considerations to take into account when looking at buying. Anyway, that's it from me. I hope you again have a great 2018, and I look forward to bringing out more videos in the coming weeks. Thanks guys, bye.